to Be the Facts presented by KI Legal. On today's episode, Michael Iakovou, co-founder of KI Legal, is joined by Michael Steinberg, CEO of Hedgestone Business Advisors, to discuss all that you need to know about business brokering.
Hi everyone, Mike here from KI Legal. I am joined with Michael Steinberg, who is CEO of Hedgestone Business Advisors, formerly known as Empire Business Management. Michael, you prefer Michael or Mike?
Mike's good.
Mike's good. Mike and I connected on LinkedIn, I would say at this point, almost a year ago. I've been following you very closely. I think what you do is relatively niche. You are a business broker. A lot of times you'll see real estate brokers kind of dabble in the business broker space, not well. And I think what you've done, and feel free to jump in here, is you've focused on businesses, representing them throughout the buy and sell process, and you've grown tremendously. I've been watching you closely, and kudos to you.
Thank you.
Tell us a little bit about your business.
So in the beginning I dabbled into real estate. I wanted to get into commercial real estate in Manhattan, but then I found the niche, and selling businesses is a different animal. So, I basically just dove into that industry, all different types of businesses. We sell car washes, we sell laundromats, we sell healthcare businesses, we sell restaurants, hotels. We just sold the Hyundai's hotel on Wall Street. It's not one business specifically, but, we sell income and revenue.
Yeah, so I think income and revenue is something that naturally, whether real estate is something where you're going to look at the income and expenses of a commercial real estate parcel, but businesses, it's a little bit more difficult, right? And you mentioned a couple things there, right? Different verticals, we'll call them, different types of businesses. The way you underwrite the value of, say, a hotel is going to be entirely different than the way you underwrite a car wash, right? Walk me through those two examples. How do you look at what this car wash is really worth versus, a Holiday Inn hotel?
Absolutely. So when you look at a hotel, it's still a business and a property. There's a lot of circumstances where there's someone who owns the building and they get, a lease from the hotel operator. But most of the deals that I work on are when the owner of the hotel owns the property. So basically, you're going to take the income, you're going to take the occupancy, you're going to take the revenue, the RevPAR, and the ADR, the average daily rate. You're going to look at all those things. You're going to look at the end of the year what the NOI of the hotel is. And based on that NOI, it's the same thing as real estate. That's a capitalization rate. So depending if you're on Long Island, if you're in Manhattan, that rate varies. In Manhattan, it's a little lower. In the burbs, it's a little higher. So hotels are pretty much hotels, not motels. Black and white. You can see exactly what the revenues are because a lot of them are flagged hotels and they're, the franchises. A car wash it's much different. It's a big cash business, even though cash is still, it's 20%, it's not that high. However, The way these guys write off their expenses, they're not making money on paper. So how do you figure out what it's worth?
Sure.
And that's the gray area where, I educate sellers on what their businesses are worth.
Got it. Are there any we'll call it industry averages or metrics, on either your gross revenue or your net or I know it differs. Going back to the example of, say, a hotel, at what multiple do you see a hotel selling at? At what multiple do you see a car wash selling at?
So a hotel can be viewed at two different angles, in my opinion. If it's a smaller hotel in the burbs, you do a multiplier of the gross sales. So we just sold last year the Bayshore Inn. It was doing about 1.8 million. We sold it for a little under 10. So about a 4 to 5 time multiple.
Got it.
That's hotels.
Got it.
Also, you look at the NOI. In Long Island, the cap rates are 9 to 10% for hotels.
Okay.
Which we have plenty of hotels for sale. The car washes, So there's a few different types of car washes. We have full service car washes, which is, there's a lot of full services on Long Island and Westchester where the customers, they love that touch. And then you have express models where you see this coming across the country.
Limited labor. Yeah.
So I'm selling express models, just the business alone, from 8 to 12 times, not including the properties.
Not including the property. Got it. Okay. Now, when the property is in the sale, how does that kind of change the way you underwrite the business?
So
Because that's like the golden egg of every operator, irrespective of what business that they're in, right? If you own the restaurant and you also own the building, if you're light on one month and you can't make rent, you're not going to evict yourself, right? There's tax implications. There's a whole variety of things. So in that example, how does it change how you look at the business value?
So when you own the dirt, it's that much more, the building or the property, it's that much more of a premium. Because like you said, tax implications, you can depreciate, you can use it to your advantage. You could put a rent at a certain amount. Say if the market rent is $5,000 a month, on paper you're paying $3,000 a month. Even though on paper the property is worth less, you're still going to put more cash in your pocket because you're controlling your rent. And when you're selling a business and a property, it's so much more valuable than a business, because you can really get creative on the financing.
Got it. You threw out a term before, which I want some more. I guess your definition, RevPAR. Like, how would you define that for the audience?
Basically, it's revenue per day.
Got
So say the hotel is averaging about $145 a day.
Got it.
It's ADR RevPAR.
Got it. Okay. Going back to the hotel industry, coming out of COVID, hotels, at least in New York, were relatively dead because people weren't traveling, airline industry, staying home. Have you seen more transactions in the hotel space as of late?
As of 2022, yes. There's a crazy amount of transactions because a lot of these owners now, they're with their mortgages, they're on their
Last legs, right?
last
And they have to sell.
So they have to sell it. 2020, a lot of businesses went out. A lot of hotels went out. I forgot the number, a crazy number in New York. But it was scary to get in.
Yeah.
So right now,
But therein lies the opportunity, right? When I think it was Warren Buffett that said, "I am greedy when everyone's fearful. I'm fearful when everyone's greedy." Right?
Yeah.
That's what the smart investor does. On that point, and we spoke about this before we started, about the nexus between our firm, KI Legal, and being headquartered in New York and our activity in Miami. I also know that you've established a presence in Florida as well. Have you seen kind of the flight from New York in the business sense to, say, South Florida? Have you seen that kind of taper off, stabilize? Do you think that's here to stay, or what are your thoughts on that?
I've seen it taper off a little bit because a lot of those, it was so hot Florida during COVID, and now you can get great deals in New York.
Sure.
So I feel like that slowed down a little bit. I feel like, New York is a great place. It's a great city where you can make deals now. Before it was expensive. During COVID, obviously, like you said about Warren Buffett, it would have been a great time. But now it's also a great time to get into deals. And a lot of these owners right now, they're seller financing because they know that the rates, it's so difficult to get mortgages. So as a broker, I go in there and the first impression I make is, first question I ask is, all right, would you seller finance this deal?
Yeah, walk me through that process. I mean, for people who don't know what seller financing is, I'll give a quick and dirty explanation. It's when the seller holds a note, right? So let's say the property is worth $10. You're going to put down 20%, 30%, 50%, whatever the number is. And then rather than a lender being involved in the traditional sense, like an institutional bank, the seller is functioning as a lender on the difference. Whatever you would finance, they hold that over a term of years. You pay whatever the interest rate is. A lot of times it's actually better than what the market is right now. As of today, being October, let's say 20th, 21st of 2022, you're seeing home mortgage rates on single family residential creeping up into the high 7s, 8s, commercials even higher. Where are you seeing seller financing deals? And I know it's a hard question to answer, but is it safe to say that they're most of the time it's better than that right now?
Yeah, yesterday I sold a car wash, 25-year term, 7% interest rate, so better than
Static, or was
static.
that? Got it. So there you go.
Static, yeah.
Static, which is just a fancy way of saying that it's fixed. It's not going to be like an arm or an adjustable, which and over how many years?
25 years.
Amortized over 25 as well. It's a great deal.
And we didn't start the note until next year. That was part of the negotiation.
That's something else I would have asked for, and there are a billion ways to structure these deals, because what happens is you have three parties in this deal. That's the way I look at it. You have the actual business and what's working for the business and what isn't working. Then you have the buyer, what they want, and everything that comes with them, their liquidity situation. Then you have the seller and what they have. Maybe they need to pay off vendors. Maybe they have debt. Maybe they have a mortgage. There's whatever.
Yeah.
So it's that balancing act of how to structure that deal, which again, there always has to be creative solutions. And I think going back to my initial point about non-specialists, real estate brokers, for example, dabbling in the business space, it's good to go to somebody like you and your team, because this is what you guys do all day, every day.
So we live and breathe every day. There's no days off. Every day is the same.
And how fast has your team grown?
From October 2021, we had, I think, 6 or 7 brokers. Now we had one office manager. Now we have about 35 brokers, and we have about 15 office managers.
That's great. That's tremendous growth. I think that's relatively on par with KI Legal. We merged in December of 2019, and we've grown to around 35. So yeah, that's tremendous. Good stuff, man.
Good stuff.
Yeah. Look, I think, and that's not a coincidence. The world throws curveballs at you, and during that time, right, it was COVID, right? And we're still kind of digging out of COVID, and the people, the companies, the operators who were creative, who were able to pivot from, this is the way this deal's always been structured, this is the way this business has always been run, to, oh crap, this is not going to work because of X, Y, and Z. We need to do it this way in order to get the deal done, in order to make rent, whatever it may be. Those are the ones who have survived and who are going to do well and prosper, because, again, the ones who couldn't pivot, they've all been cleaned out. And we've seen that, especially in the restaurant space, which we haven't even touched on. The operators that were making super skinny margins, and, everything's going up. Labor's going up, taxes are going up, commercial lease, well, it's kind of come down a little bit because of COVID, but we expect it to go up again when things kind of reposition and stabilize 100%. They weren't making that much money. They should not have been in business, right? So what are you seeing in terms of in the restaurant space? Because I know you do a lot of those transactions.
So yeah, food costs is it's very high.
Inflation.
Inflation is what's killed it. Payroll is the hardest thing right now in the restaurant world. Is to find any restaurant owner will tell you this, is to find good staff.
Sure.
And when that happens, you got to replace people, so your payroll is going up a little bit when you're doing that. To have a healthy payroll, I would say 25-27% is a healthy payroll all in. I'm seeing restaurants where their payroll is at 40%.
Got it.
So
and therein is your margin, right?
That's it.
Because back in the day, restaurants used to make, 25, 30%, 20% margin, like they were making a good living, right? Because cost of goods was lower, cost of chicken was lower, your commercial rent was lower, so on and so forth. But, we have squeezing margins that have been squeezed over time, and then with more staff on hand, or the turnover, it just logistically, it creates a disaster.
And as a small business owner, how are you going to make money? You're making not even single digit returns because of how high these expenses are. So a lot of these guys, they're owner. You can't really run a business absentee anymore unless you're a big group. It's very, very. You could, but it's very hard. Just want to say that.
Big group, and we spoke about private equity, right? Institutionalized money, the white shoe Wall Street guys coming into non-traditional spaces like car washes. What are you seeing there? Because you're not the first person. We represent a bunch of car wash operators as well, and it's a good business if you run it the way a business should be run, right? Looking at margins, all those principles that you were talking about. But I think the PE space has caught on, and they're coming in and they're. I've heard they're buying by like tens of car washes at a time, right?
They're buying portfolios because that business, those guys, they like the express model because the car wash business is the payroll business. That's your number one biggest expense in that business. So as an express, you can really scale that business. So they're buying 10 at a time because they can control all 10 at one time. There's not that much labor. That's why they like the spaces, because the scalability. So that's what I'm seeing. I'm doing a lot of deals with private equity companies. This year so far, I think we've sold like 15 car washes.
15?
Yeah.
What's the most expensive car wash? And don't tell me who it was or the name of the company, but like dollar amount. What was the most expensive car wash you sold?
Well, I have one closing next week that's $25 million, which is
wow,
which is a monster. But this year so far, $9 million.
Wow, that's tremendous. And the most, I don't want to say cheapest, but the most affordable one.
Affordable one. Yesterday we did a deal at 2.5. The guy put down 400. So he really bought the business, even though the purchase price was 2.5. He bought the business with 400,000.
Yeah.
Because the business is paying off.
Sure. And again, I think in order to, you come in, right? A prospective customer seller calls you up and says, "I want to sell my business." In order to substantiate that 2.5 ask, right? There needs to be record keeping, right? There needs to be taxes, whatever it may be, to kind of get there, right? What are some of the things that you base your ask price on?
So when anyone says, "I want to sell your business," I would say 50% are not serious because their expectations are way higher. So what I do is I basically, if it's a car wash business, I basically ask them a few questions just to see if they're telling me the truth. How many guys do you have on a Friday at your location? If they tell me I have 2 guys and they're a full service car wash, then I know they're not making money. But if they say I have 25 guys, we know that their payroll is about $500,000-$600,000.
Got it.
So the first thing I do is I get their payroll. With any business, I'll get their payroll. If it's a restaurant, I'll get their food cost. I'll go through the whole data sheet of what I need. I don't even need their financials yet at this point. We go over it. They're shocked because they're like, "Okay, I'm not making what I thought I was making." And the way I value it is based on what you're netting. So if they're netting $300,000, if it's a car wash, a full service car wash, I would say it's worth anywhere between 1.5 and 1.8 right now in the market, 5 to 6 times for a full service.
And how much are lease terms playing into your analysis?
So with the car wash, leases gold. Landlords landlords have the power. If someone has 10 years left in their lease for a car wash, it's standard in car wash industry that the landlord will ask for $20,000 a year, $30,000 a year to extend that lease.
Because they know they think at least that you're making a lot of money, so they want to wet their beaks.
They want to wet their beaks. They want that, the money, and then also, but if they don't take it, then they get the key back. That key's worth $1 million. You can't really build car washes.
Yeah, sure. I mean, there's a lot of environmental considerations, zoning considerations. That is absolutely true. That's why they're so valuable. So you mentioned car washes and the multiples in that space, but like restaurants now, what kind of multiples on sale price are you looking at?
Restaurants, the way I value it is if I get if I have an owner-operator, how long would it take that owner-operator to make that money back? I would say a prime restaurant is 2 years, including their salary.
Okay.
So say if a restaurant does $2 million a year and it makes $300,000, right? And if the guy we find a buyer that operates it, so instead of $300, he'll take a salary, he'll make $375, $400. I would say that restaurant's worth between 1.5 and 2 times.
Got it.
So it's worth, maximum 800, 6 to 800.
Got it. Okay. Financing options outside of seller financing. Do you see banks? See, the problem is, right, with the inflation, and banks have really tightened up their liquidity. But before that, were you seeing banks give loan facilities for these types of deals?
Yeah, I see. I work with a couple of very strategic and creative lenders that can read between the lines.
Which ones? I'd be interested in hearing this.
We actually started our own in-house
Okay.
finance.
Talk to me about that.
So basically, our guy can look at a restaurant. If the guy says say it's a pizzeria, he says he's making $30,000 a week. My guy would look at his food bills, and the food bills are $2,000 a week. We know that he's not telling the truth because the food bills should be between 25 and 35%. So he'll look at that. He'll see that the food bill is $6,000 a week, and he'll be like, okay, so that's a check. He'll look at the payroll. He'll look at the POS reports, and if the bank is that comfortable where the business is actually making it through this reverse engineering structure, he'll give the loan. He might need some collateral from the buyer, but we can make it happen.
Got it. So collateral from the buyer. You're looking at primary residences, things like that, right?
Love primary residences. Love other, we can cross collateral other residences too, investments.
Sure.
Life insurance policies. We get really creative.
Okay. So the collateralization of a life insurance policy, is it just like a pledge on death, or what is it? How does that get structured?
I'm not really too familiar. I'm learning about the life insurance end, but it has to be a whole term.
Whole term, okay, and there's a dollar value associated with the whole term, assuming that you've had it for enough numbers of years, and you pledge on the and you collateralize the dollar value. That makes sense.
Yeah, that's something I'm digging in now because.
So I was gonna say, what if the person doesn't die for 50 years and they default in year 2, right? So.
Could happen.
Yeah, sure, and that's why it makes sense that you actually tap into the dollar value, the cash dollar value of the whole life insurance.
Yeah.
Very interesting. We can talk more about that. And then you mentioned some creative deal structures. Walk us through some other, I guess, war stories that you've had that involved a creative deal structure, but ultimately you got the deal done.
Happens every day in this business, as you know.
Yeah.
There's so many deals that don't happen because you don't get creative. Like there's on every deal. I shouldn't even say this, but to make a deal happen, I would cut my commission. So I don't do it. Obviously, I don't promote that. I don't say that. I don't tell people that. But if I know the personality of the buyer and I know the personality of the seller, and they're too hard-headed, they're not going to make it done over a couple of bucks, I'm willing to invest and get the deal done because we're all about volume here. And that's one way that I get creative. Other ways is I refer very professional and knowledgeable attorneys like yourself.
Thank you.
That will help facilitate the deal because no disrespect, but there are some attorneys that, I know it's not you, there's some attorneys that kill deals because of time.
Kill deals because time kills all deals, irrespective of what you're selling and what you're transacting in. But specifically in a commercial transaction, a business transaction, I do see a lot of attorneys who don't do that on a day in, day out basis. They think, it's just like buying or selling a one family house, which, if you don't practice real estate law, on a simple like one family house transaction with help because it's not adversarial, right? For the most part. You can lean on colleagues, even opposing counsel, title company, you can ask questions and you can labor through the deal, not get it done as efficiently as say myself, having done thousands of them throughout my career, but you'll be able to do it. What we see in the commercial transaction is, negotiating an indemnity, right? Negotiating a wage and hour potential lawsuit.
All right, whenever you guys are ready.
So what we see in commercial transactions, business transactions, whether purchase or sales, is sometimes you'll see your transactional real estate attorney try to dabble in it, and going back to your point about time killing all deals. That's one way of killing a deal, but it's also incompetence. I don't know how you want to call it. I mean, I think a stark difference between handling, say, your client's first home purchase, a one family house, for $800 million, whatever it is. It's not an adversarial proceeding, right, or an adversarial transaction. You can lean on your the opposite side of the deal, ask questions, because everyone's kind of aligned of what they're trying to do. You're trying to sell, you're trying to buy. There's a title company that, again, working with a good title company, there's questions about clearing issues, liens, violations. They'll help out, right?
Yeah.
But in the business sales space, commercial transaction space, they're a lot more complicated. These transactions have a lot of moving parts, right? You're dealing with assignments of leases, you're dealing with indemnity provisions, you're dealing with wage and hour lawsuits, which have personal liability, successor liability, which, these are not just terms that us lawyers like to just throw out. These are real things, right? And I'll give you a perfect example. And again, this is just for illustrative purposes only, but let's say you have a car wash, you're a seller, and I'm the seller, you're the buyer, and I have not been paying these guys right at all for years, and I'm accruing liability, and there's a 6-year look back period, right? And there's also personal liability. You come in, you buy, and there isn't some kind of indemnity that covers you as the buyer for past acts of me. And you don't fire any of the guys. You come in and say, guys, my name's Michael you, not Michael me. I'm the new owner, I'm the new boss. Nice to meet all of you, let's get back to work. But there's been no firing, there's been no rehiring, there's been no retraining. There's no bright line delineation between you and me. There might be a potential claim of successor liability in that hypothetical, which my non-payment of their wages may somehow tie you into a lawsuit. Talk about a massive mess up by your attorney that didn't negotiate that provision correctly, because when you do get pulled into the lawsuit, they're going to say, well, judge, look at the 4 corners of the document. If it's not clear, judges like to look at the 4 corners of the document in commercial transactions. Right, in anything commercial, because when you're talking commercial, the courts often take the position that, hey, if you're a business owner, you're educated, you're a smart person, you should have, if it was negotiated that way, it was negotiated that way for a reason, right? So it's important that as to your point, that you do have competent transactional counsel that does M&A, private M&A, we'll call it, because if you don't, issues will arise. You don't want your personal injury attorney handling your sale of your $3 million car wash. It's $3 million. Get someone who does that work, right?
It actually happened to me where the personal attorney handled the client's business, and they didn't
the transaction.
This transaction, and there was no non-compete.
Got it.
So the buyer was not protected. The buyer was the one who had the personal attorney. So the seller was able to open up
right next door,
take his existing clients.
Oh boy.
And it happens all the time. So it's like you said.
Yeah. So like non-competes are non-competes are construed very narrowly by courts and case law. But to your point, you are buying the goodwill of the business. You're buying the assets of the business. And going back to goodwill, basically the customer and client base, right? That's the value of the business. Yes, this table is worth whatever it's worth. In the car wash example, all the equipment, the heavy duty machinery, that's worth money. There's no question. But that car wash having been there for 20 years and doing X amount of revenue per year, that's what you're buying.
Well,
that's the multiple of what you're looking at, right? So non-competes are business points. They should be handled by the brokers. And then the attorneys come in at the end and just kind of button them up a little bit, but it is something that is super important that is discussed when you're deal making.
Absolutely.
The other things I know people, whether buyer or sellers, always have questions about are what's a commission structure like for someone like you?
Your business. So, the standard commission, any business broker will tell you this is 10%. However, you don't want to, if you're doing $100 million hotel, you're not going to go in there and say, yeah, my commission's 10% because the owner will just laugh at you. So every industry is a little different. Car washes, I normally get 6-7%. Restaurants, I get 10%, sometimes even 12%. Laundromats, 10%. Hotels, 3 to 5%. So, the smaller businesses under $1 million, we get 10% all the time, minimum. Sometimes we get 12. Anything above $1 million, if the owner is a reasonable owner, then we can negotiate. But if the owner is not reasonable, then I'm gonna say 15% until you get reasonable. Because it's all about dealing with reasonable people.
Sure. So in the seller financing hypothetical, where using your example, $2.5 million car wash, amortized, the balance of the purchase price amortized over 25 years, $400,000 down. How does your commission vary, if at all, in that scenario?
Doesn't vary. We get paid on the total 2.5.
Got it. Makes sense. Okay, that's good to know. Are buyers paying their own broker, or is it like traditional residential real estate where the seller's kind of fronting the entire broker, then the brokers work it out? How does that work?
So the seller pays our commission, but of course the money's coming from the buyer. So I like to get certified checks or bank checks at the closing. So when the buyer gets their adjustments and their checklist from their attorney, I always try and put our, if it's going to the seller, I always try to segregate it so the buyer pays us directly. Because then the seller might write it out of the escrow account, which is fine, or he might forget and give you a personal check, and that can, that
Could
delays
balance, it
things.
could be issues, yeah.
I like certified checks.
Now, let's say a buyer of a business comes to you, wants to work with you. Who does the buyer pay your fee, or does the seller pay your fee?
Everything is negotiated. 99% of the time, you get paid by the seller.
Got it.
But if I'm working with another broker and I've done a lot of deals with this buyer, I might come up with an agreement where it's a buyer broker agreement. Pay me X amount.
Got it. Okay. The other thing that we had spoken about was NBBI, which stands for National Business Brokers Institute. Is that
Yes,
it? See,
yes.
I remembered. Brain's still working, even on a Friday. I thought it's a tremendous opportunity for people looking to get into the business brokering space to learn and get educated. Tell us high level, like what you foresee for NBBI.
So NBBI, it's a National Business Broker Institute. Our mission is to help real estate agents. They can stay at their own companies, they continue to do their real estate work, but they learn this skill on how to sell businesses. They get the beginning points of it. And if they like it enough after that, then we can talk about joining Hedgestone as an affiliate, maybe becoming a broker in the future. But it's something where they can learn business brokering while maintaining their current lifestyle of selling real estate. It goes hand in hand.
Sure. I mean, yeah, there's always overflow and synergies between real estate and the sale of a business. Has that launched yet?
I did a soft launch as of yesterday.
Got it.
It's brand new, but I'm gonna launch it probably next week sometime.
Got it. Best of luck to you.
Thank you.
Good.
Thank you.
All right, so let's just closing remarks. What with everything going on and forecasted for 2023, obviously inflation is here, 7%, 8%, whatever it is. What are you anticipating the landscape to be in 2023?
I think there's going to be so many deals for buyers where right now, like even myself, cash is king right now. You can find great businesses for sale. There are deals out there where we're selling a ton of businesses. But next year in 23, you're going to see things that are 60 cents on the dollar, I believe. Because there's a lot of these highly leveraged owners that, they're so highly leveraged where, that maybe they have to sell, and statistically, there's about 10,000 baby boomers retiring every day.
Yeah.
And 20% of them own businesses.
Oh, there you go. I mean, the numbers don't lie, right? I agree with you. I think, again, going back to COVID and the operators that did survive, they're hanging on by a string. And then now you got this inflation, cost of goods going up, and now you have a recession, the consumer spending less money at your business. I mean, it's going to get rough out there.
Yeah.
It is going to get rough out there. So I would encourage anybody looking to sell their business, and it could be for a variety of reasons, whether it's like retirement, baby boomer example, it could be changing spaces, I want to go into something else. Now may be a better time to consider transacting than 6 months from now, because again, the amount of supply, in this case businesses for sale, pumping up numbers, the asks and sale price are naturally going to come down, right?
Oh yeah.
The same principles in real estate apply to, or in the labor market apply to the business sale market. So, some current trends people should know about. Anything that we haven't touched on?
Current trends. I think we hit a lot of it. Financing stuff.
I think the seller financing is the biggest takeaway here.
Yeah, I mean, another thing that, it's lucrative for the business brokerage opportunity. We have a merchant division, merchant services. So basically, we work with another company, and, if we can save the business money on their merchant services, a lot of these companies, they're not doing the cash discount program where, they're letting the customer pay for that 2 to 3% charge. They're paying that 2 to 3% charge. That can be $50,000-$60,000 a year. I've saved people $50,000 a year where they don't even know they can save that money.
Yeah.
That's a manager's salary right there.
Yeah.
So I didn't touch base on that, but that's, every little expense matters in business. That's
Sure. And then just closing remarks here, as everyone knows, we're KI Legal. We are a business law firm. Everything transactional, litigation, restructuring, asset protection, you name it. I think it's important that when you're looking to potentially either sell or buy a business, that you engage a business broker, not just any broker. And I recommend Michael and his team at Hedgestone Business Advisors. Congratulations on the new name, formerly Empire Business Management, which if anyone is buying or selling businesses in the city of New York or Long Island or Westchester, definitely heard about your company. You've grown, and I think that's a testament to your good work. And
Thank you very much.
It's a pleasure having you on. How can people get in touch with you?
You can go to hedgestone.com and just hit contact me. You'll see the phone number there and give us a call. We're open 24/7.
Looking forward to talking more in the future. Thank you, everyone, and we'll see you soon.